Welcome to TheoTrade. This is Don Kaufman. Once again here on Friday afternoon. It's September 19th, 2025, and the S&Ps, they are reaching for the upper edge of the expected move. I'm going to cover that here in just a moment. Look at this. S&Ps up some 33 handles on this September. It's the triple witch. The triple witch, I got to tell you, it's fairly docile though for this triple witching. All right, a lot to cover here, of course, on this TheoTrade weekend update. I think the thing that stands out the most is when you tell people like, yeah, the Fed, they cut, but then the interest rate, it's higher. That's right, Fed cuts, rates higher. We're going to cover that and much more because there's a lot of implications to just that. It's like when everybody expects something to happen, people, it's already priced into that marketplace. Always be mindful of that. You know, you think you're like a step ahead of the game. Look, everybody knew they were going to cut. So what happened? Okay, markets got ahead of it. And as soon as he did cut, what happened? Interest rates went higher. We're going to cover that here in just a moment. Before I cover that, I do want to look at the SPX. As I often call the SPX the mother of all products. The SPX, this is the big one, people. This is the one that matters. And you ask, like, why does it matter? Right? I'm going to show you exactly why it matters. Because here we are. There's literally 17 seconds left inside of the entire trading week. And if I scroll down over here, I'll show you option statistics. The SPX is going to do just shy of 4 million contracts today. And if you look at the SPY is like, you know, basically tracks SPX. It's it, it's over, people. It's all over. Spider does about like 7 million contracts over here. I mean, they're basically roughly one and the same. But the SPX is a $6,664 product. It's a behemoth. This is where people go, but Tesla, okay. Oh, look, I'm going to pull up Tesla. It's 3 million contracts. But Nvidia, all right, let's do this. Nvidia is good for like 2 million. There's nothing even close. Like Apple, okay, Apple's good for about 2 million. Nothing's even close. But then you got to recognize that again, the SPX is a magnitude of how much bigger than something like Apple? I mean, look, these are contracts and options based on a $6,000 product. Okay, Apple. Okay, is kind of an afterthought. It's like a little pimple at that point. So there's just mass, okay, of trade and capital moving. In fact, yesterday, you want a crazy statistic, and I want to start with this because, again, people just don't grasp the magnitude of trade and how much money is going through. Yesterday, okay, there was 84 million option contracts. That's the total overall. That's not just the SPX. That's from the OCC. That's the Options Clearing Corp. Okay, 84 million option contracts actually traded yesterday. It's a new record. I mean, today is going to be heavy because today's a triple witch, but into Thursday and Friday of a triple witching week. And the triple witching, of course, is when your index options expire, like the SPX, your equity options expire, well, like your Apple, okay? And then, of course, your futures contracts expired this morning, which are like your S&P futures. And I know some people get all kinds of crazy, like, they call it quadruple on CNBC. That's because CNBC doesn't know what the hell they're talking about. There was a product years ago, many years ago, that never took off. And the product, okay, was single stock futures. It never took off. Like nobody ever traded them. They like not even around anymore. So, you know, there is no quadruple witch. It's a figment of your imagination. But the triple witch is here. It's gone. And I have to tell you, it came and went, and it's pretty docile, which actually makes me, again, I'm a little bit more on edge because 84 million option contracts traded yesterday. And I feel like 84 million like contracts trade and like nothing happens. What has really occurred then, okay, is we took this massive ball of risk to explain it and kind of put it in context. Yesterday, like literally yesterday in the markets, like I'm honest here, nothing happened. Nothing happened this whole week. You're like, why are you covering anything then? Because nothing is going to lead to something. They took this massive ball of risk and they just picked it up and they kicked it further out, okay? And it is a massive ball of risk. And you say, well, how do you even know it's a massive ball of risk? Okay, because the open interest inside of the SPX, because the trade volume inside of the SPX, and again, it's a $6,000 contract. You know, people look at the S&P futures, and the S&P futures, ironically, They didn't even trade that much today. They traded just over 1 million today. That's unusually low for an expiration day because usually people still rolling over this morning and so forth. Unusually low. But the trade in the S&P futures is predominantly like if the S&P futures do, for instance, 1 million contracts in a day, you got to realize like 80% of the volume in the S&P futures is because traders are hedging what's going on inside of the SPX. So it's just all interrelated. And when I say things are a little slow, a little docile, you look at the advanced decline line. It's an absolute crap fest. I'm not even saying slop anymore. It's just this is a crap fest, a 50-50 out there. And you go, yeah, but the marketplace was up. Well, let's talk a little bit about that. Let's talk about the market being up. I agree, the market's up. Okay, I agree, the S&Ps, and they were reaching for this upper edge of the expected move, which is 66.78. We came into 66.64. We missed it, tried for the corner and missed. I mean, we got as high as like 71, 72. To me, this is like, it's good to go. That's as close as you're going to. Come on, it's a $6,600 product. Give it to me. Anyway, is the marketplace up? Of course, the marketplace is up. All right, being led though predominantly by none other than QQQ. So the NASDAQ actually breaks outside of its upper edge of the expected move. But I want you to look around because we all realize that the Fed cut 25 basis points, right? So yeah, that happened. So the Fed cuts 25 basis points and everybody's like, and then the market rallies because the market loves it. Well, the market as a whole, I'm going to close that up. The market as a whole didn't necessarily rally. Like, look at home builders. Okay, this one's interesting because home builders, everybody was anticipating the cut. They got the cut. Did you know that the home builders closed at the lower edge of their expected move? Okay, if you look at Jets is an ETF. Okay, just based on like, airlines and so forth. That one was massively unchanged. I looked at like SMH, which is semiconductors. Of course, that's actually to the moon. Why? Oh, you got, there's deals going on out there. NVIDIA buying chunks of Intel, dogs and cats living together. You look at stuff like healthcare, and I'm just going through some of the usual suspects. Do you know healthcare was actually down very slightly on the week? This is a fun one, XLP, which is consumer staples, which is, everything that you and I would ever buy, like, Walmart and crap like that, lower edge of the expected move, okay? Then we actually get into what? This is the materials sector, whatever. It's almost lower edge of the expected move. Okay, XRT. What's XRT? Well, this one's actually, unfortunately, heavy influence from tech here, even though it's retail, but it reversed a little bit. It did reverse. And then, of course, the technology, which smashed the upper edge of the expected move. So, like lately, the marketplace, okay, it's really been a tale of two different markets. You got what's up and what's down. And by the way, the last thing I did want to mention, of course, is financials. The financials, up listlessly higher. Okay. And if you ask me, like, and again, I'm really in tune with financials, obviously spent, 15 years working at Thinkorswim and TD Ameritrade. And if you ask me though, why are the financials, okay, all time high? They're cutting interest rates. Okay. And you have things like a subprime, like issue inside of like used cars. I don't know if you guys saw that, but the company Tricolor actually went up into bankruptcy. I don't think anything's going to come of that. Okay. But it's kind of a red flag. When a subprime, it's for used vehicles. Subprime actually goes up, but the financials are basically sitting at like, all-time high, okay? The marketplace right now isn't asleep, but it is absolutely impervious to everything that's been thrown at it. In fact, we're even going to talk about just that, okay? Every day we find a way. So moving along over here, so the Fed cuts, okay? The Fed cuts. And when I say the Fed cuts, how does that influence, though, the 30-year U.S. Treasury, or, for instance, the 10-year? So when you actually are going after a mortgage, your mortgage, even though you have a 30-year mortgage, very often, a lot of people don't even do that anymore, okay, because there's like, arms and so forth. But if you go after a generalization of a 30-year mortgage, they actually base those 30-year mortgages predominantly on the 10-year interest rate. And the 10-year interest rate, okay, here's the day of the Fed right here, and we went straight up. We were trading literally 4%, and now we've gone to, let's just call it 4.15%, like right in that neighborhood. So we've actually seen, rates went up, and is it a dramatic move? It's big. I wouldn't say dramatic, but it's definitely a sizable move in a very short period of time of interest rates actually going up. So it's a lesson to traders that, it doesn't matter what you think, it's priced in. It is what it is. And I love to point stuff out like that because this is where you're like, oh, well, what makes you nervous? First of all, okay, too many years in the brokerage industry, too much time behind the desk, during times like financial crisis. I'm always looking at the angle, okay, of where you can get your head taken off. That's my job, okay, especially for describing this to retail traders. Yeah, you're a retail trader. I'm a retail trader, okay, and I'm always looking at the angles over here of, if you will, like what's wrong with this picture. Well, first of all, the only thing that really was rocking this week to the upside is tech. Okay, I know that somebody's inevitably going to point out, they're like, no, I have a stock called Joe's Tree Cutting Service and it went well. I have Starbucks and it finished higher. Okay, yeah, Burrito Brian ain't going to save this thing, is he? Moving along over there. But generally speaking, most of your sectors didn't really fare that well. The ones that did, probably, like from a sector standpoint, probably had something tech or tech related in them. All right, so that's step number one in here. But moving along over here, okay, the interest rate, again, literally went higher, okay, as the Fed actually cut. But everything else, okay, you're like, oh, it's pretty docile week, except you start looking at places like the US dollar. Okay, and again, I'll go back to my notes over here. The dollar reversed, and it reversed in a pretty significant way. And again, I'm looking at the dollar sign DXY, which not every trading application has. There's another way to look at it. You could look like a euro versus US dollar. Okay, this one kind of inverted, where the euro was almost to like $1.20 and actually reversed all the way back down to $1.17.5. And these are pretty significant moves in here, but the US dollar actually gained traction. And what's ironic about that is not a lot of people expected the US dollar to gain traction. But as the dollar goes higher, most of your commodities predominantly take hits. So I'll zoom in over here because oil took a little bit of a hit. Okay, but then you look at gold, right? One of your other commodity products, obviously. Look at gold. Gold took a hit for 2 days and today actually popped back. Okay, there's again some news breaking and so forth going on, but if the dollar, the dollar continues to have strength after this, I think that this is a pretty critical reversal. But if the dollar continues to have strength, I'd look for commodities to be under pressure. Like, look, gold does not have to go down as the dollar goes up, but if the dollar goes up, it sure as hell is not going to help the cause of gold, right? So it's going to put pressure every single day. A stronger dollar into gold can weaken the situation, if you will. All right. As I was actually saying a moment ago, huge dollar reversal. Bonds actually sell post-Fed. And the next thing is, I say every day we find a way, okay? Every day we find a way alludes to the fact that, okay, when you look at like the advanced decline line in here, like whatever, man, it's a 50-50 out there. Look, during each trading day, okay, like last week, and let me actually come into here. Last week, how did the market find a way? It found a way from Broadcom, okay? This week, how did the market find a way? Okay, well, this week and from last week into this week, you basically had a marketplace that was Tesla. So Tesla last week reacted, of course, to Elon Musk buying shares, gaps up again, outside the expected move, 2 consecutive weeks, pretty much 3 consecutive weeks outside expected move. These are dramatic moves. Okay, NVIDIA has not been a lovely performer throughout the course of this week, but it actually found a way to come back to almost even, okay, on the week. Looking at Meta, and I'm literally detailing each of the major tech stocks. Meta breaks outside the upper edge of the expected move. Was there news on it in this week? I don't know, maybe they released some ridiculous Ray-Ban sunglasses that didn't even work. Google, okay? Google, here you go, found a way. The market's finding ways because all that's really going on is we're stuffing option order flow, okay, down a very, very small corridor. That small corridor, like, it's Google, whatever, it's Meta, okay? Just to give you an idea, when I say it's a small corridor, Meta traded 22 million shares today. Yeah, whatever. It traded like, almost 600,000 option contracts. People, that's not that much, okay? It's not that significant. And relatively, okay, mundane or small trades, they're still going to move the marketplace. You got Microsoft today that was flat all week. All right, you want to know why the market's up today? It found a way. How did it find a way? Shove an order flow down the throat of Microsoft all throughout the course of the day, like literally. Obviously Microsoft popping into the close over here. Okay, you had Apple. Okay, can anybody describe why Apple is up after what was a like a failed product launch? Well, because a bunch of geeks, okay, got in line this morning in New York City waiting for the Apple Store to open so they can get their shiny new iPhone that looks exactly like the shiny new iPhone that they had in their pocket from last year. Nevertheless, okay, the geeks will win this round. As I said, the market's finding a way, and I wouldn't overthink this too much. Okay, we're just playing this like wild like rotation game of musical chairs, and yeah, eventually it comes to an end. And yeah, that volatility is going to get rocking. But for right now, okay, you focus on the fact that look, a day like today, I know a lot of people look at the VIX. What is the VIX? 15. Look, at this point, okay, even with the marketplace rallying and all-time highs, I would not look for VIX to go lower. And I've said this time and again, you have an administration that's a little bit volatile. That's okay to say, right? So it's a little bit volatile. So the administration's volatile, so the volatility actually, picks up a little bit. But more importantly than looking at like VIX, I pay attention to these volatility futures, and this is interesting. Okay, what's interesting is the volatility futures finished higher today with the marketplace higher. That is unusual. And that, if there's like one warning sign coming into next week, that's probably it. Like, again, I don't see volatility movement really anywhere else. Volatility is not contracting, okay, in VVIX, but it's also not going up. Volatility is not making any big or dramatic moves. And I would have expected, and again, if you go back to VIX, I would have expected VIX, let's pull up expected moves. I would have expected VIX to crush down after what? After the Fed announcement. You would have thought the exact same thing. How many people actually caught that, honestly? Did you catch that? Because, when I say that's what I do here, I'm looking at angles, right? And I try to pick up the angles that most retail clients are not going to see. So you have the bond market selling off, hitting lower edge of its expected move. You're like, you didn't see that one coming. I figured the bonds would have rallied because they cut interest rates, right? Cutting interest rates, no, okay? They cut and the marketplace actually raised interest rates. You have the dollar with a key reversal, and the dollar actually rips, okay, off of what? Off of slightly lower interest rates. Again, must have been priced in over here, so they rip them. Then you start to compound the idea of like, holy crap, why is volatility actually higher? And again, I'll use VIX because people are comfortable with VIX. Okay, why would volatility be higher? Didn't we pass through the risk? Aren't we sounding the all clear? And the answer is no. Look, there's definitely some change afoot in the marketplace, but we've actually seen a lot of this in the last couple of weeks. Okay, this one, a little different. Okay, big change of pace. Like you have to pay attention to dollar. You got to pay attention to bond markets, but you really have to pay attention after you pass through a risk event. Okay, and risk says, no, I'm higher. That gets me on my game over there. All right, last but definitely not least, let's talk once again about SPX. The SPX just missed the upper edge of the expected move. Okay, so this is a little wild because you cracked outside the upper edge of the expected move last week. You almost hit the upper edge of the expected move this week. But what are we really anticipating? So if you actually look this week, and I'm actually gonna detail it this way, but this past week, the one literally we just passed through, we had basically a $94 expected move. It's $94 higher. We missed by a very, very small margin, meaning that the market's moved like, 80, 90 bucks higher, whatever. Okay. Question mark. What's next week? What are we looking at for next week? Okay. Because it's not, where we've been, it's where we're going. And I like to do a little bit of compare and contrast. Why? Because next week is now back to $84. And you go, oh, well, the volatility dropped a little bit. It did, of course. There's no Fed announcement. There's no triple witching in here. The volatility, okay, for next week, it's absolutely rock bottom. Keep your head in the game over here. I'm serious. The volatility next week is absolutely rock bottom. Okay, like if you had a VIX, literally, if like the VIX was just for next week, the VIX would be trading like under 11. Like the VIX for next week is basically, let's call it 11. The real VIX is a little further out, contango. The real VIX is trading at 15, but the VIX for next week is like 11. What does that tell you? I'll tell you exactly what it says to me. It says, don't sell options. Don't sell short-dated options. You're going to get killed, okay? It's only a matter of time. Look, you're nearing turning the corner now to late September. We've been on this volatility like warpath, except volatility hasn't exploded, okay? Be real careful as actually how you proceed. If you're going to be bullish, use spreads. I'm going to say it again. If you're going to be bullish, be bullish. Use spreads. Define your risk. Okay. When we revert back down, when things start getting a little crazy over here, it's going to be tough. Okay, to not get caught in the crossfire out there. Again, volatility up, dollar up, bonds down, dogs and cats living together. The S&Ps are really fairly quiet week for what is a huge triple witching. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.